Welcome to today's IVG Market Blast. I'm Brad Alexander, and today we'll take a look at forex trading on Brent crude oil, Aussie dollar, US dollar index, silver, and gold. Just a reminder that these videos are only an observation of current market conditions, and these are not to be considered as trading advice. And don't forget to like, subscribe, and keep up to date. Despite the fact that the US dollar is getting stronger based on a few factors that we will cover in a moment, price action on gold is rising. Price broke out of the ascending triangle we spotted last time and may be forming a cup and handle pattern. If you're not familiar with this, the cup represents a bowl-shaped pattern and the handle, a smaller dip rising back up to the resistance point of the cup. It is generally a bullish pattern as price action moves higher from the cup breaking resistance. We are seeing something similar in silver with a more ragged-looking cup, but these days silver has been mimicking gold. We note that in both the stochastic oscillator is turned up from overbought, indicating that current price action may also continue higher. In the last video, we looked at the strength of the US dollar, and we see a pullback as global indices recovered a bit. Unfortunately, the latest speech from the White House gave the markets no clear direction regarding the war in Iran. In fact, it was quite negative and confusing. This signals possible increased prices in crude and more inflation, therefore a higher US dollar. We see price action at the lower trend line and the stochastic oscillator considering turning up mid-chart, but keep in mind this is a fundamental trade, not a technical trade. Is there a such thing as an inverse cup and handle pattern? Here's one on price action on Aussie dollar, which is the opposite of what we saw in gold. This is actually quite rare, as gold and the Australian dollar often move in the same direction, especially since they are both traded against the US dollar. However, these days, gold is acting as a safe haven for investors, while the Australian dollar story is more about growth and the lack of it with their major trading partner, China. On the 4-hour and daily charts, we see bearish signals on the stochastic oscillator and bearish on the daily MACD. Also, price action is in a downtrend at the upper trend line. But watch out for today's non-farm payrolls, as every instrument in the markets is usually affected. We mentioned crude oil, and we have to take this very seriously with supply being dramatically affected by the war in Iran and the danger in the Strait of Hormuz. Price action on Brent crude has formed an ascending triangle. If price breaks resistance, $120 is the next key level above. If price falls to the lower trend line or to $100, we may be seeing a range trading opportunity. Keep in mind that this is a fundamental trade, and news regarding the Iran war will dictate the direction of the price of both WTI and Brent crude. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.